So we continue to think that a lot of investors missed this kind of big trade that we had. You know, we can talk about last week being down, but the prior 8 weeks were up pretty strongly. And many investors really didn't take advantage of the weakness we saw in December to kind of step up. So you tend to sense that this pain trade will be even moving higher. And on the dips, people do want to put some money to work. Look, the earnings expectations have come in meaningfully from where they had been in the fourth quarter. And you probably have some potential for some upside surprises in the first quarter. Earnings revision trends have stopped going down, and that's kind of a positive dynamic for the market.
Rick, we've spoken a number of times about how in the last 5 to 6 months the dollar hasn't held above 97 for long when it has crossed above it. Has that changed now?
Yeah, I think it has, Wilf. Now, granted, it's a down day for the dollar index, although not much, and it's still hovering a quarter cent above that level, so there's a bit of a cushion. And do remember, the high close of the year is right around 97.67, so we've given up close to a half a cent from a close to a close perspective. But the fact that it's holding up here, and there's so much negative action outside the U.S., even with some of our numbers a bit softer. Just take, for example, a big macro number that came out in Japan overnight. The February preliminary Japanese machine tool orders. You know, if you want to kind of get a big macro grasp, you look at these numbers. It was minus 29.3, Wilf, the softest since October of 2009. So, in my opinion, as long as Europe, Japan, and China, maybe that's an asterisk with all the issues with trade, but maybe they're all asterisks with the issues of trade, that I think the dollar is going to be well supported. Now, will it continue to hold and escalate from here? I think for the most part, I would say yes, but not in a breakneck pace.